Welcome to the opened and closed positions, as well as the profit and losses update. This is a video that I do each week to talk about what happened this past week as far as any opened or closed positions, whether we saw profits or losses. And this covers the week of July 15th through the 19th. Before I get into that, there is a thing called the SPX Investing Program. It's a program that I have developed. It's up and going now, and there are links to get to that program in the description below this video. There are also links that can take you to additional videos to learn more about the program. Also, right here is an email address if you want to contact me and if you have any questions about the program. I do a number of videos each week. The foundational video is the daily video, and we really put that to use this past week. It can not only help us to see things ahead of time in a positive way or negative way, it can keep us out of positions that would have been detrimental to us. And that's pretty much what happened this week. I do a number of other videos that are weekly videos, and those go around the outside, but all of the videos pretty much point to the daily video together. So that would be the best thing if you want to have really in-depth analysis and commentary. The videos are available publicly right at the close each day. If you want to have early access to them, I upload them and they're made available to members in the program immediately. Please know that what I'm showing you here is for educational purposes only, and it's based on what is taught in the SPX Investing Program. You must independently decide to implement either open or close any of these positions. You're also welcome to modify any positions that I may suggest according to your personality. You might be willing to take more risk. You might want to modify a position that I suggest. That's what this whole program is about. I just say, okay, here's an idea you might consider. You take that idea, modify it to your personality, and then choose whether or not to implement that. You get to enjoy it when you're right. You also have to take responsibility when you're wrong. And your results are going to be different than what I post. I'm just using a more conservative approach and just what is happening according to what I actually teach, because trading is risky. And if you don't really know what you're doing, it can be even riskier. Okay, let's go through some open and closed positions for the week. First of all, just to go through some highlights, the S&P 500 did show some weakness throughout the week. It looked pretty solid at the beginning of the week, but we were seeing some cracks starting to emerge. That was giving us some contradictory signals that were being generated, and we ended up falling below the 20-period moving average. We held on to it on Thursday, but then we lost it on Friday, and this has now caused the short-term trend to change to negative. And if you want to get more in-depth analysis and commentary about that, please watch the daily videos. As of right now, to give you kind of a high-level view, the S&P 500 internals, we're looking at the advanced decline line, the new highs versus the new lows. They're holding up fairly well right now, despite the weakness that we've been seeing in the S&P 500. And this is happening because there's a rotation that has been going on from the mega caps and large caps that make up the bulk of the S&P 500 weight. That's been shifting over to other stocks in the S&P 500. And that can be taken as positive because we're not seeing money actually coming out of the market. We're seeing money going from one place in the market to another place in the market. And we're also seeing that across the broad market. So the broader market is also holding up. And as this is happening, and we don't know how long this is going to continue, we just watch it day by day, mega caps and the large caps are seeing continued profit taking, and they did underperform for the week. What happened was on Monday, we set an intraday all-time high, but we hit resistance right at that point that was actually based on the week before. I was watching this. I was watching it being played out. After that, we saw weakness. We didn't see any late day buying, and that was causing some concern. Then we did close at a new all-time high on Tuesday, but just by a little bit over the intraday high, but there wasn't an awful lot of conviction behind it. Then everything changed on Wednesday. There was a gap lower on Wednesday. We saw more weakness on Thursday, and then we kept falling again on Friday. So the numbers that I present here are going to vary according to how you personalize the positions, the size. You may adjust things in the positions that I suggest. And you may have different profit or loss targets than what I preset. Okay. But the idea is to preset them according to your personality. One thing that I want to go through here is what I cover in this particular video is pretty much just the top of the pyramid here. These are short-term positions, and we're looking to make nice little profits. They usually last days to weeks. And then the idea being that we build that up using compounding. And when that gets to a pretty decent amount, in fact, to the point where we really can't manage this anymore because the positions become too big, then we take the bulk of those profits and we put them into a long-term program, which can last for months, years, or even decades or generations. And then there's things that I teach about in the program where, okay, you might have some very long-term positions that you have. How do you protect those when we hit difficult times? Well, there's things that are taught that you can easily implement that will give you much more peace of mind. It'll let you take advantage of profits when we're going up and at least allow you to break even if we're going down. There are also some intermediate term strategies that I teach that I don't really cover here. And these usually last weeks to months. And this can be swing positions where we're taking advantage when the market goes up. We also can take some positions when the market goes down. So these can be either bullish or bearish positions. And then covered call writing. This is how we use positions that we have to generate income. And you may use that income to live off of, or you may use that income to provide some insurance or protection on your portfolio. Or you may take some of the profits that you see in the middle part of the pyramid and also put them into your longer term program that is developed over a period of time. So this is the kind of basic approach that I'm taking. But again, it's the top part that I really only focus on in this video. So what positions were opened and closed? According to what is taught in the SPX Investing Program, the following positions were considered. So we come up with a plan while the market is closed, and then we enter those positions if the proper criteria is met. So we did have a couple of open positions from the previous week, July 8th through the 12th. There were two positions that we carried over from last Friday into Monday's session. Both were showing profits and they were going in the right direction, but they had not reached their targets as of Monday's session. Then we had a technical event. We hit that resistance in Monday's session. I was watching it. I saw it. What I do in the program, it's not real active yet, but I have a chat room and we can talk about these things. I'm also sending out market updates with graphics showing people what's really going on. And we can talk about these things as they're unfolding. And I saw this happening and I'm like, okay, if we can't break above the resistance from the previous Thursday and Friday, we better look at getting out of these bullish positions that we're in. And that's what ended up happening. So both of those positions ended up being closed. One was closed for a 14.3% profit. We were looking at a much higher profit target on a percentage basis. The other position, we closed back at break even. One thing that I hate to do is open up a position, have it going in my favor, start to see a profit, a tidy little profit, and then have things reverse and then have that profit just evaporate. I don't do that. So if I'm in a position that's looking pretty good and everything starts to change, I look at getting out if I see it on the charts or if we're getting back down to the same place where I got into that position. There's too many opportunities available after that to worry about these positions. It's better just to say, okay, let's close this and then wait for the next opportunity. So what were the total considered positions for the week of the 15th through the 19th? We considered 10 positions. We were looking at doing things every day. 8 of these were bullish, but they were not filled because the criteria that we have for these to be filled was not met. There were 2 bearish positions that we did consider, and they were filled on Friday, but there's a caveat that I want to explain here. So we had 2 bearish positions. They were filled, but it was not according to what I teach, which is called the consensus approach. This is where we take everything together and we say, okay, based on everything that we're looking at, we weigh the positive, we weigh the negative, and now the consensus is that we're positive or negative. Okay, that's the consensus approach. And that's why I look at so many charts. That's why my videos are longer. And that's why we have a very, very high degree of success and not an awful lot of stress because we see things developing before they actually happen. We saw these positions that were looking like we could get filled on Friday based on some other criteria, but not the complete criteria. So if you're more aggressive, you could have got into these positions on Friday. We still don't know what's going to happen with those positions, but according to that, they were filled. So as of the close on Friday, there were two positions that were closed earlier in the week that I already talked about. Position 1 and 2 were closed on Monday, July 5th, due to profit being given back, which is something I just hate to have happen. Then two positions were open on Friday, but this is the more aggressive approach, which I call the single indicator signals. There are some charts that I consider to be primary charts. And sometimes, if you're more aggressive, you may get into a position when one of these primary charts is actually giving off a signal. If you're more conservative, no, you're going to wait to see other charts to confirm that we're going either up or down. So this was not the consensus approach. And then we currently have those two open positions that are more aggressive right now. So how are we doing for the month? Going from July 1st to the 19th, we considered 28 positions so far for the month. 16 of those ended up being opened. 12 of those have already been profitable. We did have one loss where we had to end up taking a 20% loss on one of them. And then one was closed last Monday at break even. Two positions are still open for the upcoming week. So thank you. I hope you found this helpful. Please feel free to check out the SPX Investing Program, especially it's free for right now. I'm probably going to lock it down in August. So check it out and just see what you think. And I'm posting more things there than what I post here. So have a great weekend, and I will talk to you in the next video.